What's up, guys? It's your boy, Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Visa, ticker symbol V, trading for $189 a share as of June 28th, 2020, equating to a market cap of over $400 billion and a PE, or price per earnings ratio, of 34. I should note, Visa has seen nearly a 40% rally in share price in the last few months, which is certainly nothing to scoff at. However, when you compare it to the rally that some of its new competitors in the payment processing marketplace, Visa is actually lagging behind. Like we saw in our PayPal analysis earlier this week, the company is up over 100% in the same period. Even more impressive, Square is up 173%. So, what's the move? Should we increase our limit, or is Visa maxed out? This is your quick stock analysis. For transparency's sake, we already have nearly a $5,000 position in Visa, along with all of the other payment processors we've previously mentioned, including PayPal and Square. Clearly, here at Quick Stocks, we strongly believe in the credit, debit, and digital process payment marketplace, but let's see how Visa stacks up against its competitors. It only seems right to start with this, as there seems to be a misconception about how Visa makes its money. And considering all the talking heads just screaming recession, it's important to remember that Visa makes money every time someone uses their Visa credit card, regardless if they pay it or not. And it's the bank that issues the credit card that assumes liability. Visa simply processes the transaction between the bank and retailer, charging a predetermined fee. But of course, in a recession, consumers spend less, which hurts payment processors like Visa. However, pump the brakes. Despite a potential economic slowdown, Visa is not going anywhere, as the company has become so ingrained in our everyday way of life. Before the quarantine, 4 out of 10 Americans said that they made no purchases with cash in a typical week, while at the same time, approximately only 15% of Americans said they made all of their transactions using cash. And I would certainly be interested in seeing some statistics regarding consumer behavior after the world regains a new state of normalcy. But in all honesty, I don't think anyone would be surprised to see an even quicker shift away from cash as a result from the global pandemic. And the thing is, Visa operates in more than 200 countries and territories. The idea of digital payments has already exploded in popularity, as every passing year more people are converted to the cult of plastic, which certainly represents a huge catalyst for the company. However, I should note the company is struggling to crack emerging markets such as China, India, and Russia, which favor local players. Meanwhile, PayPal has entered China's booming digital payment market after its GoPay purchase. But don't get it twisted, the company is still a behemoth. At the end of fiscal 2019, Visa stated that there were 345 million Visa credit cards in circulation within the United States, with another 800 million cards outside of the US. However, it is important to note that banks have silently been decreasing consumers' credit limits due to fear regarding people's ability to pay back the loans during current economic uncertainties, which certainly could harm a company like Visa, as it will restrict certain purchases from going through. And also, considering the year-over-year growth has drastically slowed down during the past 3 years, which is reflected in the company's decelerating profit and revenue growth. Many people are starting to argue that the company's glory days are behind it. However, this could actually end up being a catalyst for the company. As always, remember, stocks trade on expectations and react on how those expectations play out. As the company did not provide guidance for Q3 2020, the company could pull out a few surprises, which is possible considering all of the stimulus money floating through the economy. One could correlate that to an increased use in cards, and many people are still suffering delays in their unemployment, forcing them to live off credit cards. As this is all merely speculation, I'll spare you, but it is interesting to consider nonetheless. And as we can see here, as of March 31st, 2020, the company had nearly $73 billion in total assets, with $13.4 billion of that being cash on hand, which, considering the company has $13.8 billion in long-term debt and $38 billion in total liabilities, we can see the company's foundation is extremely sturdy, especially considering that they are reinvesting so much of their money into future growth. Let's see if we can get a better idea of Visa's game plan by checking out some of the company's acquisitions, which, I'll be honest, they're far more than I'll be able to cover in a video like this, but I'll give you a quick gist. As of July 4th, 2019, Visa reached full ownership of Earthport, a provider of cross-border payment services to banks, money transfer service providers, and business. With Earthport, Visa can reach over 99% of consumers and small business bank accounts in 88 countries, including the top 50 markets. On July 17th, 2019, Visa announced it completed the acquisition of Payworks, a provider of next-generation payment gateway software for the point of sale. Visa also acquired Plaid for $5.3 billion, which enables users to connect traditional financial accounts to new app-based platforms. For example, this technology is what allows you to link your bank account to your Venmo account. And like I said, there are plenty more, but I think you guys get the point. So with all of this in mind, what's our move? At its current valuation, Visa seems like a solid play. On top of investors receiving a small dividend, it's a great company to buy and hold for a long term, regardless of market noise. And I should note, the same risks apply as we covered in our PayPal analysis, including government regulation and crypto, which I won't cover again for redundancy's sake. I'll simply leave a link in the description. Anyways, I think Visa is a great company who has many more years of success ahead of it and will definitely outperform the market. However, like we said in the start of the video, we already have a $5,000 position in Visa and many more investments in companies playing in the same market. For this reason, I'm not going to be picking up any more shares, but I can still highly recommend Visa for almost any investor. It's just that here at Quick Stocks, we are more interested in building out our position in Square and PayPal, which at their current levels is getting hard to justify, but that's for another video. Anyways guys, that's all we've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 555 subscribers and plan an early retirement. I will catch you guys in the next one.